And welcome, welcome, welcome. That means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the market step at a time, look at the charts that have grabbed our attention, talk about the news that's important, give you guys some insight, some analysis, break it all down, help you better run your daily routine with more informed decision making. We got a good show here today planned for you. The markets are running. We got a lot of juice going on, especially across different sectors, different industries, and certain types of companies. We're going to take a look at all of it, break it all down. There's a lot going on, obviously, because of the Georgia election runoffs yesterday, and the markets are reacting to some of that news. We'll get Coach Matt's analysis, Coach Tyler's analysis, and I am here as well as your host, Coach Tim Justice. Welcome out, everybody. If you're brand new to our channel, by the way, it's great to have you. Click subscribe, click the bell. We've got a lot of new subscribers. We're going to continue to grow that. We're going to have a huge community here that's helping each other over time, and a vibrant one. Hashtag Team Tackle to my veterans. Appreciate you guys so much. Had an amazing coaches show last night. If you're a pro member at Tackle Trading, if you were there live, I'm glad that you could be there. If not, catch that recording as soon as you can, maybe after the halftime report today, and go see what Coach Matt did. Matt, I loved the show last night. It was so much fun. We're going to get to markets here in just a minute. Talk a little bit about last night's coaches show. I thought it was a special one.
Yeah, I thoroughly enjoyed hanging out with the team over there in the coaches show last night, and we went through all the lists. We talked about the purpose of each one of those lists within the Tackle 25. Remember, the Tackle 25 is a fundamental driven covered call list, is what it is. We take into account many fundamental criterias, but we're looking for great fundamentally strong companies that are liquid, that have proper valuation, that as an investor, you can look to and be like, okay, I have confidence in those companies from a fundamental perspective. I know I can write covered calls because they got the liquidity necessary. And so we went through the latest edition of the Tackle 25, and then we went through dividend fireworks, poor boy covered calls. We talked about the creation of those lists, what went into the creation of those lists, what is the typical methodology of traders and investors of how they utilize dividend fireworks, or they utilize poor boy covered calls. And then we went through the latest edition of Dirty Sexy Money and talked about how we use that list and the importance of that list, and treating that list, like the growth, like a growth list, like it's supposed to be. And then the newest addition to the Tackle 25 being the top 10 ESG list. And we talked about the importance of ESG, that movement, and why we felt these stocks were meant to be on that top 10 list. So, we went about 2 hours, had one technical difficulty, but outside of that, we had a lot of fun last night, and I just thoroughly enjoyed when I get a chance to hang out with the crew there in the coaches show, and it was fun. We had a lot of fun.
I agree. Energy was great. The community was very appreciative. It was a lot of fun, wonderful show, and we're gonna have another one of those here today.
I had a John Wick intro.
You did, as a matter of fact.
I had a John Wick intro.
Oh,
I got the crowd ready. Got them pumping.
My daughter, who just got home from the Army, I actually made her and her dad, we sat down and watched the John Wick series together recently, Matt. And my 20-year-old daughter, who's an Army kid, she thought it was one of the most badass things she's ever seen in her life.
She was like, yeah, that was definitely what Matt needed to walk into the coaches show on.
That's right. Great energy, great attitude. I love that.
I had my dog right next to me. We were ready to rock.
Tyler, how you doing today, sir? Wednesday, markets are running. The Russell 2000's breaking out. In fact, Maria in the chat, she said it blew up my condor. That's one thing, I guess. If you're neutral on this market, you're probably not reading it 100% the way I am right now. But Tyler, how are you doing today, sir?
I'm excited. Maria, I took my shotgun to my condor this morning as well, so I feel your pain on that. But look, man, bull market, dude, this has been fantastic. Not gonna lie.
It's really incredible what is happening. And I do want to get a technical read. Then we're going to give the news here first. Tyler, can you run through the S&P, the Dow, the NASDAQ, the Russell? I do think it's a day where we have to go through all four indexes and kind of take a peek at what's happening, look at the relative strength. Give me a technical read on it first. Then we're going to talk about what's happening in the news.
You got to be pleased by how well we bounced back after Jan 4th, right? You come back, 2 days left in the Santa Claus rally, the first 2 days of the year, the last 2 days of that 7-day period, and then you're like, what's going on? Market's supposed to go up every day. But dude, this has come roaring back, especially in small caps. Once again, proving that the buy the dip crowd is relentless. They're just relentless. The market is just using any excuse to go up. It's bullish, Tim. I mean, might be better to use ES in this instance, but new highs, man. New highs for the S&P. I like it. The big tell for me is just the way which we bounce back from Monday, right? Because Monday was kind of spooky, and we've come roaring back. So I'm impressed. This thing's gone up all day long. I mean, look, the crazy thing, I say all day long, what are we, 3 hours into the day, and it seems like the market's just been going up for the last 17 hours. It's strong. I mean, we're getting ready to break out. I see nothing not to like here. We're above all the MAs. S&P is not leading. You know, it is up 1%, but it's good. I got nothing bad to say, man.
Mm-hmm. Matt, what about you technically? Just starting on the S&P 500, I do want to look at all the indexes here in just a minute. Just market reaction, price action. What's your read here?
From a price action perspective?
Yeah, just technicals, the strength here today.
Yeah, you got to be impressed with the market coming off that sell-off on Monday when you had the Goldman Sachs report come out talking about how there was a little bit of concern. Market's been responding very bullish ever since that point. From a technical perspective, again, you have yet to break a support level. You're threatening a breakout on the S&P 500. You're looking at obviously what's happening in the Russell 2000 is just a thing of beauty. And I'm sorry for anybody that got their condo destroyed, but this thing is a momentum juggernaut right now. And you know, obviously, it's been a really big boom ever since the election there in November. And you know, kind of what happened yesterday with the path to infrastructure probably being more clear today than it was yesterday. You can see that Russell 2000 continually outperforming. You know, the NASDAQ does have a little bit of concern right now. You know, obviously with what happened yesterday, and I think it's tough to read this technically without having a little bit of the backdrop of what happened yesterday. But you know, the Georgia runoffs were very important for the control of the Senate. We know the importance of, you know, that the type of policies that are being put out there right now. And so the market today is looking at this, and you know, obviously Warnock has won one of the Georgia runoff seats. The other one is still too close to call, but Ossoff does look like he's going to climb. And he may climb outside the margin of error where you can automatically get a recount there. So it does look like at this point the Democrats are going to have a 50-50 situation in the Senate with the vice president being the tiebreaker there. And what you're seeing in the market is a direct reflection of that political environment or that political reality. And so when you're looking at the concern in tech, you got a little bit of concern on big tech right now. That's being, I think that's overblown, to be perfectly honest with you. You know, Tim, you said something in the pre-production show that bears being repeated, but when was the last time a government around the world actually got any type of real regulation on Facebook or Google or, you know, or any of these big, you know, tech giants out there outside of the token? Here's a $5 billion fine on Google, or here's a $6 billion fine on Facebook. And guys, that's not going to stop Google. That's not going to stop Facebook. So I do think the concern in big tech is a little bit overblown, but they certainly could underperform here. But what you're looking at in the marketplace, and the market celebrates certainty. That's what the market always likes. They cannot stand uncertainty. But once they have a certain environment, they can start doing their probability analysis. And when you're looking at the major themes that could really drive the market from a price appreciation perspective, the path now to increase fiscal stimulus. And I know everybody's talking about $2,000 checks. And certainly that may happen. But the path to fiscal stimulus, an ongoing fiscal stimulus, has certainly increased. That path that clean path to getting, you know, a fiscal stimulus bill with $2,000 checks in the next, you know, 3 months, or, you know, another fiscal stimulus bill in 9 months from now. That is certainly something the market has celebrated over the last 12 years. And we know how much the market has celebrated fiscal stimulus over in the year of 2020 as well. So the market is celebrating that path to fiscal stimulus being a little cleaner today than it otherwise would have been with an ununified government. So you're looking at that path to stimulus being a little bit cleaner today than yesterday. Infrastructure certainly looks cleaner. Now, I felt infrastructure could have got done even in a divided government, But with a united government, you got to look at increasing your probability that an infrastructure bill is going to happen, and something that all of us as Americans, Republicans, Democrats, Independents alike, all of us should celebrate an infrastructure because we need one. And so in terms of infrastructure, in terms of fiscal stimulus, your path to getting those types of bills through a united government is much simpler than if you did have a divided government, and the market is celebrating that a little bit. You're seeing, and these are traditional Democratic plays here when Democrats do control things, but look at your basic material plays today. Look what's happening at Still today. Look what's happening with pot stocks today.
And let's flash through some of these. Let's flash through some of these.
Yeah, we'll go through them, all of them, but look what's happening to some of these areas of the market, and then look what's happening with Smith and Wesson today. These are all traditional Democratic plays that are really driving the market here today, and I think it's going to create a fairly bullish environment. And again, outside your own political belief system, that's good for price appreciation for the actual stock market.
I love the analysis. And by the way, this whole conversation around stimulus in regards to what the political implications were, Matt, you've been on this for a couple of months, and I didn't hear hardly anybody anywhere talking about it in that regard. And now all of a sudden we wake up here today and the markets are waking up to it. If we take a look at some of these areas, and we're just going to flash through some of them, because obviously this news about, the political elections now potentially being a 50-50 split in the Senate, it's what's driving price action in these industries today. Market is loving the move in guns here, SWBI, obviously. Having a big, nice day. Look at Canopy Growth though, CGC. Pot stocks, Matt, taken off, 15% move out of CGC here today. Solar companies, look at First Solar, CSIQ, maybe any of them. First Solar, nice little pop up 10%. CSIQ, earlier it was up like 15%, breaking out up 12% right now, I should say. Just making huge moves out of some of these areas. And then even like guys gambling, DraftKings, they had some specific news, but some of the gambling stocks got a nice little pop here today. DraftKings got 6% little bounce off support. But the big ones, like even Caterpillar, you had the cat chart up there, Dow component breaking out of a high base, just running, representing this move that the markets are expecting in some of these industries. Tyler, Matt, I love the analysis there. When you start seeing areas of the market heating up like this, how do you start to approach it? Do you see the theme now developing and you want to build watch lists? Like what do you do with this information, Ty?
Well, I think a good parallel to this is go back to November 6th. It was November 6th, right? The Pfizer, 6th or 9th? 9th. You go back to the 9th and you look at, because on the Pfizer news, we had a large move in some of these areas. And you look at what happened since then and the types of setups that we've seen. And I would view this gap the same way. Right. So, for instance, you had the financial sector wake up, which the financial sector has been lagging for a while, and look at what it's done ever since. It's just continued higher. And so you want to trade in the direction of the momentum and of the strength. And whether you got in on the 9th, whether you waited a little bit for some digestion and a breakout, I think you'll see something similar. If this move is legit, which I don't know how you would argue against it. You have massive volume, you have massive price appreciation. It's like an earnings announcement where it's a catalyst for the quarter to come. And so, yeah, Tim, I think that you could do any and all of the above. They were bullish coming into it. They're even more bullish coming out of it. Dips are buys, breakouts are buys. I think they all go on your watch list.
Pretty incredible moves across the board. By the way, the financial sector is an interesting one as well, because they're citing different reasons for that strength in financials, yield curve steepening, being able to make more money, all that kind of stuff. But Matt, these industries that we've named and identified, we're getting juice here today. Yeah.
It's so funny. They use the same argument to basically say the market's overinflated 2 days ago. And now they're like, yeah, but a steepening yield curve is really good for the market, apparently. Now, I get it. Wall Street struggles with trying to find causation and writing headlines that they can sell. So I get their struggle. It really is real, but people should stop listening to any Wall Street institution in any capacity. I think their track record of failure is well documented by this point. But in terms of this, yeah, you add those stocks to the watch list. You're that Tyler was talking about. There's a lot of stocks on that have already ran. So maybe you wait for a little bit of a profit taking session and then see some test of support. But I just look at this as an environment where obviously the market is showing its hand. It truly is. You got a no sell day in finance. You got a no sell day in the Russell 2000. The market's showing you its hand. It's bought into that that theme that started developing in November, and now you're seeing the continuation of it. And with what happened yesterday, Wall Street is now putting the rosiest colored glasses they can find on and trying to paint the biggest bullish picture they can right now. That's what Wall Street does.
Well, and don't you feel like you would need something substantial to change the trend and to change the narrative, right?
And so honestly, at this point, I don't even know what that would be, Tyler, outside of some snapback knee-jerk reaction to certain things.
Well, and that's the thing, right? So if this is the new normal, then you have to view pullbacks as buying opportunities, because what's
100%.
changed, right? Because what's changed? Nothing.
100%. I agree with that 100%. Pullback should be actually, any dip mechanic is alive right now.
Yeah. And I do want to make the point just one more time, and then we're going to move through commodities. Go back to QQQ or Apple or MSFT if you can. I'm reading everywhere.
You really do not like this, do you?
This one is driving me crazy.
Yeah.
It just did.
Get on that box, bro. It deserves it. Get on that box.
Listen, I mean, I'm reading all over the place, the death of big tech, the death of big tech. The Democrats are going to take down big tech. They're going to repeal 230. The Republicans hate him as well. Everybody hates big tech. Listen, somebody go find me a government, an organization, whether it's the European Union, the United States Congress, any of it, that's successfully torn down big tech for a period of time that didn't eventually get overturned or repealed or get thrown out by a judge or whatever it is. It's all saber rattling and it's all presumptions. It just is.
I agree. I agree. But, and 100% agree that no, the Democrats are not taking down big tech. Come on.
No.
Come on. And I'll save my thoughts for why on the podcast next week, but it's not going to happen. It's just not. They're not going to get their act together long enough to take down big tech. It's not going to happen. But there is some philosophy out there in the market right now, and I want to get you guys' take on it, that with a Democratic leadership, that big tech is going to be under fire more than they have been in the past. And whether or not Section 30 is repealed or not, most likely not, by the way. Section 30, even though we don't like it for the Facebooks and the Googles of the world right now, you have to love it for the industry it helped create that led to massive wealth creation in America. And so Section 30 is a hotbed political issue because we don't like, and I agree, I don't like what Facebook does. I don't like what Twitter does. I don't like what YouTube does from a censorship perspective. But Section 30 did help create the tech environment that led to this massive price appreciation over the last 20 years. And so you kind of take the good with the bad to a certain extent with that. But in terms of big tech, I do think they're going to be under fire a little bit more, Tim. And there is a thought in the market that is starting to develop. And that thought in the market that is starting to develop is big tech, i.e. the Facebooks and the Googles and of the world, those companies, because they're under fire, although they might not go down in price, these smaller tech companies are going to have a better environment to potentially thrive in. And so under a Democratic leadership, the thought process is, and I want to see if you and the team agree with this, and I don't know where I land on this. I'm just kind of giving you the information. But it will create an environment for these smaller tech companies who, whereas in the last 10 years, they've just been either gobbled up by the big tech firms or they've been just destroyed because of competition concerns from the big tech firms. So if they're under fire a little bit more, maybe Facebook, maybe Apple, maybe Microsoft, maybe Google, maybe these companies don't see as much merger and activity over the next 2, 3, 4 years. And maybe we don't see as much heavy competition pushing them down. I mean, even Facebook offered the government in one of their token, hey, please don't hate us, offers, we'll let some of these other smaller tech companies use our algorithm to help build, because they obviously don't want government eyes on them. So can an environment for smaller tech companies, can that be created where they catch up to some of the price appreciation of the bigger tech firms?
I think those firms have already had pretty good environment to grow their companies to begin with. I don't see this having some big split in tech. I don't see it
Well, no,
developing that,
no,
to where.
but Tim, here's the thing. There's thousands of companies that you don't even know about because they never went to market.
Sure. Yeah.
There are literally thousands of companies in the tech space that never went to market because they got bought up before they went to market.
Oh, Apple's
So
famous for
yeah,
it.
on
And
the
Amazon
stocks
too.
you're talking about that are already public, yeah, maybe that's the case. But what about all of those other tech companies that never went to the public market because they got gobbled up by Apple or Microsoft or whatever? Again, I'm not saying I'm
No,
not
we're just
saying,
thinking out
yeah,
loud on this one.
I'm
Yeah.
just like, I read this over a few different articles today, and I can tell when Wall Street is starting to build a
An argument and
thesis,
a theme,
right? And so that's what's happening. And I'm just saying, like, early on, do we agree? Do we disagree?
If the argument is small tech's going to prosper because big tech is going to be under fire, then I disagree. But if the argument is small tech's going to prosper because of the general uplift of those opportunities with those companies, then I can get behind some thinking there. I'm not bearish on small tech.
What do you think, Ty?
So no.
I honestly don't have an opinion.
It's
No
a tough
opinion
one.
for me.
No opinion on this one.
Nope.
I just think, honestly, it sounds like they're trying to justify why they think big tech is going to go down. It sounds like a logical twist in it, but I just don't see why both of them can't just rise as well. Why can't big tech prosper and small tech prosper?
I get it. It's only one day, but only one day, big tech is underperforming some of the other movements we're seeing in the market.
Yeah, and that could develop into a short-term trend too, by the way, in terms of performance, relative performance. But go ahead, Tyler.
Well, I was going to say, from like a trader's perspective, I certainly favor more choices over fewer, right? So,
yeah.
So would I prefer more ticker symbols in the tech sector to play with? Have I enjoyed having more IPOs this year to play with? Of course, right? So to the extent that it gives investors more choice and it allows us more opportunity, I would love for there to be more.
Whether they're onto something or not, I'm not going to bet against big tech. Like, no. That's a failed philosophy. You don't bet against big tech.
No, in my entire career it has been. Yep.
But much like the Russell 2000 caught up fairly aggressively to the blue chip areas of the market, small cap tech maybe can play catch up here. Maybe it's just because they've been outperformed over 10 years, but they can play catch up.
Yeah, and I think that thing can happen, but I'm not going to put the death nail on big tech over the logic.
Great question. Kirk says, so what happens if Georgia Republican wins? And you're talking about the David Perdue versus Ossoff, right? Right now, that's at 0.4. So Ossoff has 50.2 and Perdue has, I believe, 49.8. 98% of the vote is in. It's too tight to call because it's within the margin and it's within a recount. Okay, that's where we're at right now. The outstanding votes still do favor Ossoff in that environment, but it's 50-50 whether or not we get a recount right now out of that. So we certainly could get a recount. I don't think the market sells, Kirk, if that happens, because the market tries to find the rosiest picture, and it's just a matter of how fast it goes up or how much does it hesitate. But I don't think it sells. I just think it stagnates a little bit, but I don't think it sells. I think the market will find the rosy picture.
Look at the green on Tyler's watch list today.
It's ridiculous.
It's ridiculous. What's going on here? I mean, First Solar up 10%, Urban up 9%, US Steel up 17%, Deere up 6.5%. Freeport McMoran again running 7%.
Kirk, let me answer your question like this. I'm not too worried about these price appreciation, given that we don't know yet about that last seat. Because even though it's still there and we still have votes to count, I'm telling you this from a market perspective because I do separate my political belief system from the market, from my market response. That is something I do 100%. I do not mix my political belief system with my market belief system. Does not happen. But I will tell you this, from a market response perspective, the market is moving forward as we have a 50-50 scenario in the Senate. Democrats have leadership in a unified government. That's what the market is moving on with. Because when you look at that 0.4 and where the outstanding votes are, it's increasingly becoming less and less probable that Purdue's going to catch up there. Gee, I don't know. I mean, it just depends. Jesus, it just depends on how you want to approach it. I'm sure Tyler and Tim, myself, and everybody else is taking action today.
Jesus, I'm pulling the trigger on trades, and I'm gonna tell you right now, later in the show, we've got about 6 or 7 charts from Coach Frank. You're gonna see in this market, there's still opportunities to find where you want to pull the trigger on. I don't think you've missed everything in the market just because solar's up 15% today. You know,
yeah, and you might have missed. Well, you might have missed the movement in the Russell 2000 if you're not already an investor there, or already a trader there. But Jesus, I mean, that's totally up to you, brother.
Yeah.
A lot of trades being made today, I can tell you that.
Can I say one thing to that, Tim?
Yep.
You think about how many times we get that question, you know, so how do I participate? And it's like, if the person who asked that question 3 months ago on a big update, or November, right? November 9th, when the market went crazy on the Pfizer news, if they didn't do anything, if you did something, I guess my point is it doesn't matter when you dip your toe in. Like, what's more important is learning how to find opportunities and how to pull the trigger. I would not obsess or worry at all about not being in on any one day. It's irrelevant in the long run. Just learn the best practices and understand how to invest, and don't beat yourself up or feel like, oh my gosh, I missed something. I know today's pretty epic, but this happens all the time. And so it's just, I don't know.
Well,
I'm rambling a little bit, but.
Well, no, it's a great point, because when you're looking, take a look at the Russell 2000 very quickly. I think it's a wonderful question. When you look at the Russell 2000 and you see the market breaking out up 4.5%, yeah, I would say most trades in the small cap area of the market are done today. I mean,
from a swing trading perspective.
From a swing trade, yeah, that's what I'm talking about. From a swing trading perspective, but. Okay, and maybe we need to see that cool down and reestablish itself, because again, I mean, what are you going to do? Chase U is still up 17% today.
Yeah.
So yeah, we might need to wait for some of those areas of the market that are up 10% today to cool down, because you certainly don't want to chase that dragon. But take a look at the S&P 500. The S&P 500 has a breakout channel at 3750, and it's currently kissing off the wick at 3773. The S&P 500 is literally just breaking out right now, and so there's going to be trades to had in the blue chip areas of the market with the S&P 500 now just breaking out. And so yeah, you could see the Russell cooling off just a little bit over the next 24 hours or so, because you had such massive price appreciation today in that small cap area of the market. But the S&P is kind of setting up. You gotta, even though we've had a conversation, there's slight concern, and I do mean slight concern in big tech. Well, you gotta love the bullish response on the intraday analysis on big tech, on the NASDAQ today. You know, selling off pretty aggressively down to 12,500, double bottom on the overnight action, very healthy reversal pivot coming back up on the intraday. So yeah, it's a bullish environment, and yeah, there are going to be some trades that already ran today, but that doesn't mean trading's done today.
And that's true every single day, right? Every single day there's something that ran a bunch, and it's like, yeah, you missed it. But the other thing is, don't feel like it's all in, all out, right? I think if you get caught in the trap of, I got this pile of money, now do I throw it all in, or do I wait till tomorrow? It's like, don't think that way. I mean, just find opportunities, a little bit here, a little bit there, and eventually you're fully invested and you're participating in the markets.
Great question, Jesus, and great answers there, coaches. Appreciate it. I think that was awesome. Love the insight out of that. Let's move through the rest of the commodities markets here as we're continuing our conversation on a Wednesday, 1/6/2021. Let's start with gold. You know, I usually start crude oil, but let's start with gold. And gold has been looking beautiful lately, guys. Obviously, we're reacting to this here today. Markets are down on the gold market, down 2%. Matt, what's your take here? What's your read on gold?
Gold started selling off right when we started getting the information on exactly what was going to happen on that Senate vote, runoff vote from yesterday. Market started responding bullish, and gold started responding bearish, and this happens on gold, and I am slightly concerned in the short-term price action, and we'll talk about it here in a second. But this does happen on gold, on big up days in the market where you have a risk-on environment. Okay. Risk on environment, you're going to see a short-term profit taking in gold. Happens all the time. The question, and again, one of the reasons why we love gold is not just inflation, it is a risk off type investment as well. You cover yourself against economic calamity. And so when there's a risk on environment, it's a wash off on gold for in the short term. Now, the question a lot of people have on gold is, are we seeing a repeat of what happened in during the election of during the presidential election, where gold broke out of that 50-day moving average, snapped back, came right back down as the market started going bullish? We are seeing that a little bit, but there's a couple key differences here. Number one, you have a fairly substantial inflationary argument under a unified government with Democratic leadership. There is a fairly substantial inflationary argument, especially where that money is going to be going, in much more into consumers' hands than into corporate hands, which in my opinion does create a fairly substantially higher inflationary rate or inflationary environment than, say, under a divided government scenario, where you would not see the path of fiscal stimulus as aggressive as you're probably going to see. So you do have that argument on the backdrop. I'm looking at this and I'm saying, okay, risk on environment in the stock market, snack retracement in gold. But unlike what happened in November, gold had a much better technical scenario coming into this breakout than we saw in November. And so unlike November, where you had that snapback where it just violated the very reason why you wanted to get into it in the first place, i.e. that breakout of that, trend line coming down, which also coincided right there with the 50-day moving average. This one had a much better constructive trend, constructive pattern coming into that breakout of 1900, and then on that snapback rally, because you had a good trend going into it. Where is it coming into? It's coming right smack dab into the breakout channel, where we're testing major support. And so I do believe in the gold argument under a Democratic government. 100% I believe in the gold argument. I do believe this is a little bit of an overreaction to a risk on day in the market. Let's see how 1900 handles in the short term. But in the long term, this environment, when we're going to be talking in a year from now, guys, we're not going to be talking in a year from now at a $7 trillion balance sheet. We're going to be talking in a year from now at a $10 trillion balance sheet. In a year from now, the U.S. debt burden in America, what is that right now? What is the U.S. debt burden in America? Right?
Oh no.
Total debt.
All right,
it is $27.7 trillion, guys. $27.7 trillion. Just a couple of years ago, we passed 20 trillion.
I still remember the conversation
We're going to be talking about a U.S. debt environment that it approaches $32 trillion next year. And so, yeah, I do believe the long-term argument for gold ownership is very strong. If not, I'm not sure there's been a better argument for gold ownership long-term than there is right now.
When did it hit 20 trillion, Matt?
Oh man, I don't even know, but I
think it was 2016, 17, something like that.
No, it wasn't 16.
I think it was after 17, yeah, something like that.
We've gone up 17 or 18.
Think about it like this: our national debt has increased by 35% in the last 3 years. So,
well, and does anybody think that's going to contract anytime soon?
No, it's not going to contract. We're going to spend.
It's never going to contract. We're going to spend. So, I do think, and I think it's important to talk about gold today because there is a lot of similarities to what happened in November, both from an environment perspective as well as from a technical perspective. But I got a different read on this one. I think this is a little bit of an overreaction to the positive momentum that's happening in the stock market, risk on environment, snapback on gold. Let's see how 1900 handles. But I don't know. It would take a lot to get me off gold. It would take a lot.
100%. Me too. Anything you want to add to that technically?
I do. Yeah, that was spot on, by the way. Well done, Matt. What I would add is this is a good example of the benefit that gold provides in a portfolio from a diversification and volatility reduction perspective. On Monday, stocks get smushed gold ripped, right? Very good start to the year on Monday. And today's the exact opposite, right? Gold down, stocks up. And so for somebody like me who owns gold and owns stocks, effectively what this week has done, the portfolio's gone up, but because gold went up when stocks went down and gold came down when stocks went up, it has muted the volatility of the portfolio.
Yeah.
So I think this has been just a masterclass in that being one of the ancillary benefits of owning precious metals.
Very, very good
100%.
point as well on portfolio design. All right, let's keep moving through commodities if we can here. Let's go into crude oil next. And, a little bit of news and chatter out of OPEC actually overnight. Saudi Arabia pledged to cut another 1 million barrels per day in February and March, while Russia and Kazakhstan actually said they're going to get to increase their production by 75,000 barrels per day. Moscow called it a New Year's gift, Matt, for the crude markets. And obviously those two getting along is going to be good for crude. We're breaking out here, Ty.
Wait a second. Hold on. What was that news on crude? I didn't get the crude news today. I don't check crude news.
I know you've checked out of crude for a long time. Most of the market has, by the way. Saudi Arabia says they were willing to cut. There was a little chatter between OPEC the last 4 days. Virtual conferences, they're not meeting in person. They couldn't get to a conclusion. And Saudi Arabia finally came to a conclusion. We're going to cut 1 million barrels per day in February and March. So we're going to keep our production down, keep the supply limited, supply side argument. But Russia was allowed to increase their barrel per day production by 75,000. So it wasn't like one of these, we'll only do it if you'll do it. It was kind of a gift back and forth between
How
the
long
two.
was the virtual hug between MBS and Putin?
I didn't see, I would love to have
if
seen
it was
that.
5 seconds or longer, I got a bullish prediction on crude oil.
I didn't see the virtual hug between
if
the two
there was no
parties.
virtual hug, I got a bearish take.
Yeah.
Okay.
Crude's breaking out though.
Good for them.
Respect. You have to respect the chart.
You've had to respect crude ever since the breakout of 42. If you haven't been respecting crude oil ever since the breakout of 42, you shouldn't be looking at technical analysis.
Ty, what are you seeing here?
Here. Look, yesterday was amazing on energy. The energy sector just went nuts. And remember, this is small caps too, right? So when money rotates into Russell 2000, into small caps, energy, financials, those are two of the big sectors. I think it's just a continuation of what we've seen. Today would not be as good in the Russell if you didn't have participation out of energy. So I think it's more the same, an acceleration of what we've been seeing. And and honestly, the nice thing with energy is it never broke the 20 MA all the way up. So that more than anything is why this market has been so kind. You haven't had any adversity. You haven't had to sit through any major potential support breaks. When you get upside follow through like this with virtually no downside volatility, that's why we're kind of beside ourselves with how easy it is to trade. The market just doesn't test you. It doesn't test your mettle. It doesn't test your faith and conviction, because it goes down one day and right back up, And so it's like, you really couldn't ask for anything more. I love the response after Monday's down day, by the way. Just a complete rejection of any selling for Monday with yesterday's rally. It's quite bullish.
Mm-hmm. I agree. Got to like the technicals here. Move on to the dollar next. If we can, we'll finish on Bitcoin. Then I've got some individual stock news, just a couple items. But then I got some stock picks from Coach Frank I want to look at, and a few from the option report over the weekend, which Coach Tyler did, that I want some updates on, get some thoughts from Tyler on. We got some charting we're going to do here in just a minute. Dollar, just kind of more the same. Anybody want to add anything to this? Obviously, we're fading here. Doji inside this longer term downtrend. Matt, anything you want to add to the dollar?
To the dollar discussion?
No. Nope, just a flash. Yep, flash it through. Bitcoin next.
No, the only thing I'll say on the dollar is just keep an eye on that low base creation, because if the dollar does form that low base, violate support on that low base, you better be looking at gold on that one, and you better be taking advantage of that snapback retracement.
Mm-hmm.
Well, and it tells you, Matt, that that gold today was a stock story.
It was a stock,
not a strong dollar story.
Yep, great point, Ty.
Bitcoin last here, if we can.
Just shut up about Bitcoin.
This
is just
cheer it on,
disgusting.
Bro.
We had the prediction podcast 2 Mondays ago, and I called for $35,000 Bitcoin this year, by the end of the year. So
yeah, you did. Yeah, you did.
I expected to hit it by January 6th.
Unfortunately, Tim, we all called for that one.
You should have said 35,000. 35,000.
Oh, did I say 35,000?
Wait, this is 35,000.
35,000.
He did call 35,000.
There, I thought I was making a joke. You should have said 350,000. There we go. The numbers are so big. Your joke. I gotta inflate my jokes.
Can I give you mine? Mine
Sure.
was anywhere between 35 and 50,000, followed by a massive correction down to 22,000.
Yeah, it's just.
I'm never going to be right on Bitcoin.
Well, you might
Ever.
still be right too. We still got a long year to go. So
That is true.
It's a juggernaut. It's running. There's nothing to update here. We've been analyzing it a bunch here the last few days, and I think the same analysis there is kind of just it's a crapshoot right now. Let's call it like it is on the short term.
There's a lot of words for it, but impressive is the one that comes to mind.
That's a good word for it as well. All right, let's talk stocks, guys. Some things I want to get to obviously here today, and some corporate items. By the way, if you're watching our show right now, appreciate you guys coming out each and every day. Had a chat with one of our newer members to our community, just found us on YouTube and says, hey man, I found my home. This is exactly what I've been looking for a long time. If you are a newer member to our community, welcome out. In fact, if you're Team Tackle, let's welcome all the new members right now. Welcome them out to our community. Welcome to our team. I think it's really awesome what we're doing here lately. And if you've not yet subscribed, click the subscribe button, click the bell, come back. We do this each and every day. A couple of acquisition news, but the one that caught my attention here just real quick is UNH. Let's take a look at this one. They're buying CHHNG for about $7.84 billion in cash. And acquisition news, it's not often that the company who's doing the acquiring actually has a nice strong candle here, Tyler. Matt, we're starting to see some acquisitions the last month or so. Here's just another example of it. Tyler, is there a trade here? That's my one question. I know we got earnings coming up, that kind of stuff. But when you see an acquiring company spending money and still getting a positive market response, is that a function of today's market? Is that, do you read into that? How do you handle that?
It's so hard to be able to differentiate between how much of today's move was idiosyncratic to the company, how much of it is the broad market. It would be nice if you knew, 65% of this was due to broad market sympathy lifting it up, and 35% was the individual stock news. I mean, I don't know. To me, I look at the extent to which it deviated from the market, right? So if the market goes crazy and this is down, then you can obviously blame it on the individual stock news. But I mean, for me, you say United Healthcare, and I suddenly tuned out, right? I'm like, healthcare, what am I going to do? Not my cup of tea from just the sector's kind of choppy, messy. But am I impressed by today's candlestick? Of course. Is this a potential breakout? Yes. Is this a stock I like to trade? No, because it's just boring and choppy and messy.
I'll get you one that's not boring here next. Tesla, Morgan Stanley raised its price target on obviously the high flyer. Matt, you made the joke earlier. Whenever Tesla breaks 700, it goes to 1,000. Prove me wrong. That's a couple of days ago. Tesla's now up at $770, and Morgan Stanley put their price target at a street high 810 with an overweight rating. Stock is running here, obviously here today. I mean, what do you do with a stock like this these days? That's just been a juggernaut and momentum just play. I guess you can maintain positions. Obviously, investors aren't going to come off what their stances are. Matt, what are your thoughts on Tesla here? Just with the momentum.
My call on Tesla above 700 makes me want to go compete against Tyler and Trade Masters.
Tyler, you ready for that?
Bring it on, buddy. I'll be there today, and you're always welcome. You're always welcome to come and
I bring the heat though, Ty.
Bring the heat. Bring the heat.
Like I have like a 98 mile an hour fastball here.
You'll come prideful. You'll leave humbled. I mean, look, everybody needs that every once in a while. So
everybody needs that, Ty. I'm not sure I'm ready to get it though.
Yeah.
We'll see.
And the last one for me, we actually looked at the chart earlier, but there was a little bit of news on this one. DraftKings actually popped up here today, obviously around some of the
Tim, can I mention one thing on Tesla real quick?
Mm-hmm. Yeah. I
saw a tweet today that Tesla is approaching Facebook's market cap. So just if you're keeping track on Facebook's or Tesla's journey to usurp Apple as the top company on the planet, it's getting there. It's now a Facebook.
Hold on. Now I got to look up how close it is, Ty. What's your guess on what the market cap is of Facebook today?
I'm going to say 650 billion.
We're playing the game.
Mm-hmm. Facebook's market cap.
Facebook's market cap. Are we doing the comparison against Tesla?
Yeah, because Tyler says Tesla's about to overtake Facebook. I got the exact market cap.
So what did Ty say?
Ty said 650.
He's about 100 short.
Yep. 768 on Facebook. Tesla, 696. So Tyler,
Hey, I'm living in November. I forgot we have this massive inflation the last month. I just haven't checked it recently.
We do have to check inflation daily
Yeah.
these days.
These days, yeah.
Sometimes you start a conversation prideful, you leave humbled. It is what it is, Tyler.
Hey, you made it a game. I was just bringing up the concept.
All right.
It's okay.
Last news item for me, then we're going to look at charts. I've got a bunch from Coach Frank, who runs our Twitter account. Everybody
I got
who
a
knows,
couple.
Yeah, some as well. DraftKings, real quick here, they're up big. And Andrew Cuomo, the governor of New York, is actually starting to talk about his new policy proposals for the state of New York, making sports betting a key part of what he wants to do here. Could benefit stocks like DKNG, even a Penn National Gaming, those type of companies. We're seeing some juice on that. Just another news item there out of New York. And Matt, you had a couple of news items you want to get to?
Not news items, stocks.
Okay. Let's get into some stocks.
Yeah.
I got some from Coach Frank. Matt's got a few, and I've also got some from the option report. Where do we want to start? Matt, you want to start with yours?
I don't care. You pick.
Let's do this. Let's start with Coach Frank's, from Tackle Trading's Twitter account. I handpicked about 5 or 6. He posted about 20 of them he was interested in our Slack channel. I went through and grabbed some that I thought were particularly interesting, and then we're going to share them with the team. I want to get both you guys' take on these. Coach Frank has an ATUS. And the comment here is recently broke out of an all-time high and now pulling back. We're going to rotate here. Tyler, what's your read on ATUS?
Look, we call this a bull retracement, and I love when you get a pullback after increasing momentum. So you look at the characteristics of the preceding advance. Was it strong? Did it increase the strength of the trend, or was momentum increasing? In other words, did it have good volume? Those are the types of rallies that I want to buy pullbacks after. And this had all of them. It had good volume, really good ramp with the candles here. And really the volume was not bad the last couple of days as this thing sold off. So I love the volume confirmation, and I love the candles the last 2 days. You get a doji yesterday, you get a lower wick today. It shows you that buyers are circling right around that 20 MA. As far as bull retracements go, this one's pretty clean, which is why Frank mentioned it. I like it.
Another bull retracement, I think a little bit different analysis though. So I want to get Coach Matt's take on this one. Twillo, and Coach Frank specifically cited the weekly chart. It's a deeper retracement on the daily here, but it is a retracement. He likes how the weekly chart is testing the 9 EMA on that chart and the retracement in general. Matt, what do you think of Twillo here?
Yeah, if you go back to the daily chart on Twillo, you do have a retracement, but it's in that deeper pullback scenario. Whenever you see that deeper pullback, especially in a hot market, you really got to be a little cautious of that. So the question is, all right, why the high base fell? Why did the bull flag fell? Why did the bullish retracement fell? Why did the 9 EMA? Why did the 20 EMA fell, or the 20 SMA? You see a lot of downward movement in price in a hot market. Those support levels hold, and so you do have to have a little concern on the daily chart regarding this downward movement in price. And when you do have that concern on the daily chart, you got to stay away from swing trading mentality, because when you violate so many so many support levels on the downside, you got to fight through a few resistance levels on the top side. And so you got to be a little bit concerned there. And so whenever you see that, if you still like it, you got to switch it out to the weekly chart here. And on the weekly chart, you do have this as the beginning point of a bull flag. But quite frankly, I from a position perspective, I would like to see it come down a little bit deeper, quite frankly. I think it's tough on a swing trade on the daily chart. I think you need a little bit more time on the weekly chart for Twillo. So I think we're early on Twillo. I see what Frank's seeing. I definitely see what Frank's seeing. I just think we're a little bit earlier. You take a different stock in that space, maybe not Twillo, but a stock I'm looking at from a retracement perspective. Take a look at CLDR from a retracement perspective. I'm looking at this and I say, okay, I got a deeper retracement on the other one, but here on CLDR, a company I like the momentum. You got to like the very, very consistent pullback coming into that 14 handle. Obviously we have a little bit of increased volatility over the last few days, but that's to be understood given the backdrop of the last few days in the market. That rising 20 is coming up to those wicks there. And I think you have a much better swing swing trade here on this type of retracement that did not violate all those other support levels on the downside. So I think Frank's correct in switching that out to a weekly chart, but by doing so, you need more information there. You got to give it a little bit more time. I think on a retracement, I think something like a CLDR is setting up a little bit more. I think it's setting up sooner and is more actionable coming into today or tomorrow.
I love that, take and kind of the cross, time frame analysis. Very good. Why don't we try, while we're on retracements, let's go to another one he's got then. Let's go to PANW, PANW. Matt, I'm going to keep you on this one since you just, broke down those other two. What do you think here on Pan West?
I was going to put in a joke with quite frankly, because I do like that one. So I do, but this one would be into the scenario of PANW that I'm talking about with CLDR. And so you kind of held that you're in that zone of the 9 EMA, the rising 20 SMA. You got a similar analysis in trend and momentum. You probably have a little bit more momentum in PANW from an increasing momentum perspective, from a pivot perspective. And PANW, I like bull stocks, to be perfectly honest with you. I think bull stocks are pretty good, fundamentally strong stocks. I think you take one or the other. Quite frankly.
Yeah, I like those two as well. All right, Ty, one for you here. Work, WRK, West Rock. And that's an interesting one. It was below the 200 on the weekly chart for a couple weeks, he says. Now it's breaking out, showing some strength. He's got a couple of time frames lining up here. Ty, what are your thoughts on WRK?
Look, it's pretty. Not a stock I've ever traded before, actually, but you can't argue with the strength today. As the challenge for me, if I'm going to trade this, is it's already up 7%. This is a situation where it's tough as a swing trade because where am I going to put my stop loss and how much further do I think it could actually go in the current swing? I'd rather trade this as a position trade and give it more room to pause or pull back a little bit. So I tend to split the baby on this, Tim. If I like a breakout, but it's already up 7%, if I can't help myself but dip my toe in the water, I'll do like a partial position here. That gives me the flex. Scale in. I'll scale in, maybe do half now, but that gives me the flexibility. If this does pull back a little bit in the next couple of days, I can add more to a better price. That'd be my preferred method if I'm going to play this at this point. Matt,
any thoughts on that one?
Yeah, I think this is on breakouts. You got to, especially on a day like today, you got to ask yourself, have we ran too far? And it's only the one day on the breakout. And if your expectation is $50, well, you haven't ran too far. You still got a proper reward to risk. If Cody was here, I think Cody would be like, well, I would like to see that snapback retracement to come test that breakout channel. And so I think that's where I'm at here. It's kind of ran a little bit too far. Good breakout. If you had a clean trigger on this, like Frank probably did, yeah, that's a good trade. But if you're like Ty and me, who's not real familiar with this company, doesn't really work on this company a lot, yeah, it's kind of you're waking up to it and you're like, okay, let me get some coffee and then we'll see.
And that's a really good point right there, because if you look at the intraday, the confirmation in the first hour really happened. You could have made entry on this. It's been running throughout the day. So Frank's got it on his watch list. He's ready. He's prepared. He's got a different angle on that than a stock that just kind of falls in your lap midday, and obviously different analysis here from that. So I think it's good. Yeah. Good point on that. Yeah.
He should have texted me 4 hours ago.
Where you at, Frank?
I got 2 things to add on that, Tim. That is a good point where rarely are your best trades the ones that you just come across midday and weren't even on your radar, right? Because then you're typically chasing, or you just like, well, I'm bored, let's go ahead and do it. That's the first thing. The second thing is, to Matt's point, if this was Disney or Apple or something that I've been waiting for a while, I would be much more willing to put something on and then, like a partial position. Because I know, look, I'm going to buy it if it pulls back anyways, but if it doesn't, I want exposure. So it's like, how much do I really want the exposure? Am I willing to miss out if it doesn't come back to me? With this, sure. I mean, I don't know this company, but if it was something I've been waiting for and I missed it, I don't mind, dipping my toe in the water, even if I'm a little bit late.
No, wonderful point. If this was a stock I follow, yeah, add half on the breakout, even if you're missing your trigger, and then if it snapbacks, add the other half. Get some exposure. I'm with you on that. But when you wake up to it, you're like, I got
How did
I got all
catch it?
these other
Perfect.
ones.
Yeah,
I'm
that's
good.
right.
Yep.
That's right. Speaking of other ones, one more from Frank, and I think Matt's got a couple as well. This last one from Coach Frank's pick. And by the way, I think the quite frankly might be catching on in there, Matt. I saw Guitar Flip likes the name as well.
I kind of like it.
I kind of
Quite
like
frankly segment.
Quite frankly, this is a breakout.
Oh, I could have some really good snapback soapbox. Well, quite frankly, oh yeah,
you need a montage of Frank videos or something as the segment intro.
I like
we
it.
really do, because that would always make me laugh.
Even just pictures of Frank over the years or something without any commentary.
We should have a montage of him growing his beard.
Actually, I got the best montage for it. We'll just take classic clips from his favorite wrestlers, and we'll call it Quite Frankly. He'll love it. We'll just be doing like all kinds of stuff with those big wrestlers. No, guys, you didn't like that. Am I messing up? Quite frankly, moving on. All right, yeah. QRVO next. QRVO. Obviously, this one's not quite the same analysis because we're still testing now, right up here at this breakout point here. Tyler, I'm gonna have you take this one first. What are you seeing in Cuervo?
Little mini kind of cup and handle pattern. It's pretty. Typically, when I'm trading a breakout, I'll look back and say, well, what has this done in the past with breakouts? Does it have a history of rewarding breakout traders? Seems like it does, Tim. Seems like it does. That was one of the reasons why I didn't like UNH, United Health, because you go back on United Health and it's like it's choppy as can be. I don't know if I would have made any money trading this in the past, but Cuervo is not that. It is good. It is good. And I like, again, mini cup and handle here. Nice little base the last 5-6 bars. I don't see any major high volume on down days. So no major distribution. The volume patterns are healthy.
Well, and specifically speaking of volume, Tyler, seeing that consolidation of the volume over the course of the last week with the price consolidating as well, that's almost like the market's just saying, we're just waiting on the breakout. That's what we're waiting on. And so I kind of like it there. Would you call this a breakout right now?
You could. I mean, if
I think you do. I do.
You have to. Whether it confirms or not is different.
Pull up the 1 hour chart, Ty. Look at that 170 type.
Yeah.
Right there. Anything above there, you got to call breakout.
Yeah.
Yeah, it's a function of how much buffer do you want, and I'm the type where, look, I like to get in on the dance early. So if the price is above, I'm usually a buyer.
All right. So what do you think about this? If you have not gotten into this one yet, actually, if you look at that 5-minute chart, you got a nice little consolidation right above 171.5. I mean, you trigger now.
Above the high on momentum.
Yeah, or above the high if you want a little bit
above the high on momentum. But
yeah.
Yep.
I mean, if it's a trade you like, I mean, you gotta like what's happening literally right now.
Yeah. And I mean, it's got okay options. That might be a better stock play, though.
I would say it's a better stock play.
Yeah. And Matt, I think you had a couple. Maybe
I do.
One more or whatnot. Yeah.
I do. Let's go ahead and look at Steel Dynamics. Give me Tyler's read on this. I want a Tyler read on the daily and the weekly.
Look, isn't it amazing how just something falling out of favor and getting destroyed and just continually going down month after month after month after month. It's like they're never going to come back to this, right? And then they come back. I'm thinking about this with energy, with steel stocks, and they just keep coming, right? And so it's amazing. It's just a trend in motion, staying in motion. It's like $15. Now it's 40, almost 45. It's almost, tripled since the low. It's like, I mean, could this go to 80, 100? And who the heck knows?
It was 52 a year and a half ago.
52, yeah. So it's like, and I don't know. It's just
the weekly chart is what is interesting me more than because I do think you range up on it on the breakout.
Yeah, well, and I'm not even saying this in terms of not liking it because it can't go any higher. I'm just saying that this is a good example of when a sector comes back into favor, don't think they won't take it back up to the highs. No,
I'm with you there, and I do think Steel Dynamics gets to the highs again. The question I have for you, Tyler, is because I do love the weekly chart here, and I love the breakout of 40. Am I overanalyzing 42 though?
I mean, it depends on what you mean by overanalyzing. Is that a legitimate short-term target?
Yeah,
yes.
like if you're like, let me put it like this. You're already at 40.91, 93, right? You got a lot of chop between 42 and 42 and a half from a historical perspective.
Yeah.
Does that have to concern you enough that you would wait for it to get above that chop if you're targeting that all-time high at 52?
No, because if you're targeting the all-time high, it's a position trade.
And that's what it is, yeah.
Yeah. And by that metric, you would wait till it's an all-time high. And it's like, wait a second. Why do you want your process to be wait for the $15 stock to go to 52 to take out every potential resistance, right? Like,
yeah.
So no, I'm with you. I don't think you're too late for a position trade.
I don't think so either.
It's just, again, a situation like this, the scaling in is such an easier decision to make because it's a win-win.
Mm-hmm.
Yep, I'm with you on that. All right, next one I got is Marvel, MRVL, a little semiconductor play. Obviously, for those of you that were with me last night, you know what's on my mind.
I was going to say that STLD is, I think, already on people's radar.
I might be promoting the Tackle 25 and starting to get investments in it so that we can have a killer year.
It's going to be awesome.
No, in all seriousness, though, what do you think about that high base breakout potential? We have not broken out yet.
Yeah, as far as high bases go, it's clean. It is a 5G stock, right?
Yeah.
Mm-hmm.
Yeah, I mean, so this is a good example of what you said earlier, where it's like, yes, small caps have gone up a crazy amount, but that doesn't mean you have to chase every stock, right? Tech has fallen. What happens if tech comes back into favor? All these pullbacks and
tech always comes back into favor.
That's true. That's true. So there's your area you don't have to chase. The challenge here is the little wick, but I would ignore that honestly.
I think I would too, and I like it above 48.
Yep.
Me too. I like it above 48. Okay. Yep. Next one. Let's go Apple. You talked about Apple a little bit. We've looked at Apple throughout this week. You know, Apple was on our reports coming into the week. You know, we're kissing off the 9 EMA or excuse me, the 20 SMA there, fighting for intraday support here. Ty, give me your breakdown of Apple of how you would approach it.
I feel like tech hasn't proven itself enough to me. For two reasons. Number one, it's obvious because the sequence of candles is lower lows, lower highs, right? So we have yet to break above a prior day's high. And in that sense, it's like, well, there's potential support forming, but it's an out of favor sector in the short run. And so it's almost like you got to pull me in if you want me to do this, Apple. You can't just dance around. It's got to
show some love on the intraday. It's got to break some intraday resistance before it's go time.
Yeah, and I even think in a situation like this where it's an out of favor sector, I almost want it to break above prior bars high to pull me in. I don't, in this case, especially given that it came off of the highs today, which I don't know what the rest of the market's done the last 30 minutes, but I love the setup. I just think I want the sector back in favor. I want a nice green bar on the NASDAQ. I want this to take out a prior day's high to pull me in.
I kind of feel like we need to get above at least 131 and a half at a minimum. Give me an
intraday on that.
Yeah,
that's give me yesterday's high. It's
not too yesterday's high. It's right where your line is.
I was thinking, that 130, this zone right here.
Maybe 132. Yeah. 132 makes sense too. But what I'm talking about is the same thing you're talking about, Ty. I mean, Apple's rallied out the lows almost every day this week. It just hasn't been able to violate an intraday resistance level.
Yeah.
Mm-hmm.
And so we got to see that pattern get broken, and whether that's 131 and a half or 132. I like 132 a little bit more now. That might update tomorrow, right?
Yeah.
I mean, as the week goes on, you start to see other intraday levels, but as of now, Apple's got to break something before it's trigger time.
You have to have price confirmation here. I was looking at this earlier, and the candle was looking nice and good. And you go down to the intraday chart, and you just got to clear it. I mean, it's a great point, Matt. You got to find your trigger points on multiple time frames, because if it does happen, there's a trade. But until then, I don't think there is. So
I got two more. Applied Materials. Applied Materials does not get the love it deserves. Great company.
What in the world?
What do you think about this breakout?
Hold on.
It's a $90 breakout. You know what they say, guys.
There's going to be a new rule with once you hit 20,000, you're going to 35,000. That's going to be the new 90.
That's the rule. we save that for like Tesla and Bitcoin.
I like it. The only and Matt knows this, where did it come from before the break?
Low
I would
long.
have preferred a little
I
bit.
like it on the weekly chart more. So I do like it a little bit more as a position than a.
Yeah.
I get that. No, I might challenge that for a second here. Look at the hourly, because
no, the hourly
This is funny.
wrong.
I'm like, it's all right on the daily. Matt's like, no, I love it on the weekly. And Tim's like, that hourly sucks.
no.
It's
I
like,
love it.
Pick
on
the
hourly.
time frame that matches your bias.
The idea that it's gone too far, I would challenge. I don't know if it has. I mean, we broke out of the resistance on the hourly, resistance from the pivot point on the daily from a couple of weeks ago. We're holding that. I think as long as you hold 90, there's potential trade here. I really do.
I don't dispute that.
I think you can approach it differently. Tyler's nailed me. I mean, I hate things that have ran coming into the breakout. That's why I immediately switched it to the weekly chart. But you hold 90. I would not blame any swing trader for
it's tight risk.
trying to take it to 100.
Yeah, you have to micro analyze it here a little bit, but I don't.
But Applied Materials also is an AMD.
Mm-hmm. That's right.
Right. It doesn't move like AMD. So 90 to 100 is actually a fairly decent movement for Applied typically.
Mm-hmm. Mm-hmm. Yeah, love the chart.
Well, and you can take bar low too and make it work. I mean, yeah.
It's a company I love. It's a great cover call company too. Last one I got, Caesars. CZR.
Casinos are looking good today.
And Caesars threatening a breakout.
Do you like that one better than LVS?
Yeah.
No, I just like Caesars because it's DSM last year.
Mm-hmm.
This year.
Mm-hmm.
Gotcha. It looks good.
I like good. Caesars better for strength, but the Las Vegas Sands consolidation breakout is pretty strong too.
Well, to your point, it has already exceeded the Feb high. LVS isn't even close.
Yeah.
So if you're going for the leadership in the sector, I agree. I mean, you're still well off the highs.
Listen, Caesars on a breakout with the potential ROI cash flow numbers that it has, it is sexy. So there's no reason why that should not be on our members' radar. No question about it. I love it. So many great charts today, guys. I love this. In fact, I could look at charts all day, but at some point, I guess we got to choose which ones we like the best, right? You can't trade everything in the market. Fantastic, guys. That's all I got from a show perspective here today.
Yeah,
We've been going through a lot of stuff. It was great. Tyler, let's go into final thoughts here. Anything you want to say to our team out there, community? Final thoughts from you.
5%. We just eclipsed 5% in the Russell. I don't remember the last time we went up 5%.
Ooh, that's a good question.
Like it's not common. I mean, the Pfizer day was a sell the news, right? I mean, it didn't stick. This is completely different. So it's like, how do you disbelieve this? Like, what more do you want? And it doesn't mean it's going to go straight up. It just means from like a breakout, institutions moving mass amounts of money into particular areas. I don't know. It's just another witness to me that.
What does it say? I mean, what does it say? Because what it doesn't say to me is more important than what it says. What it doesn't say to me is Wall Street has any concern about the markets.
Not at all.
Not at all.
And it also just reiterates and reinforces that the market is, if it wants to price something in, it ain't waiting, right? So it's fast. 20% on steel, like, it's like, okay, infrastructure, price it in, like in the next 2 hours, like, let's do it, just 20% up. And it's like, okay, I mean, sure. Good luck stepping in front of this and trying to.
These are the new norms though. They really are. Pop and hit. These are the new norms. Yeah. You're going to see quick hitters and quick falls. Yeah. This is the market moving into the future. And if volatility scares you, the stock market might not be for you then.
Mm-hmm. Mm-hmm.
It's impressive. No matter.
And volatility is not just to the downside, because the market going up 5% is a high volatility day.
Sure,
it is volatile.
Dylan has a question for me. I want to answer. Actually, he says, "What are you doing with XME here? We analyzed XME earlier.
Yeah, let's take a look at XME.
Take a look at the metals ETF if you can, there, Tyler." And Dylan, on a no-sell day, on a breakout like that, I've not done anything.
Trailing stop is the only conversation.
I'm not covering. I'm trailing stop, maybe protecting that part of it. I have not moved my stop up.
Okay, what about this, though? Because especially in options, guys, you're well past break-even here. Well past break-even.
Oh, yeah.
So what about locking in a few contracts to offset the risk and just letting that puppy ride?
Well, I play the equity on this one. I play options
Well,
on a lot
reduce
of
yours
them,
then.
but yeah, I could
Same
easily sell
concept.
some equity. I could sell a little bit of equity. There's nothing wrong with that. I mean, taking advantage of a 7% move in an ETF on the metals market seems like a pretty okay thing to do. At the very minimum, I'm probably going to roll stop and protect it. But I'm very happy with the momentum, the move. I've learned through my career, you guys can give me your feedback on this, but I'm much more patient with winning trades myself personally. My personality, it just is better for me that way. When I start to have profitable trades, I'm patient. I'll move stops. I'll execute trading plans. I'm a lot quicker if a trade's not working to just dump it and get rid of it.
That's how you should be.
Yeah. Yeah.
Well,
Cut the
you,
loss, let the winner run.
you still got 2 hours. I mean, at this pace, we'll be 14% by the end of the day. So just chill. But no, I'm with both of you. It never hurts to take profits. But
here's the question I have for you guys though. If you're trailing stop, the only area you could trail stop on the intraday is underneath the daily low.
I was looking at
I mean, there's 36.5 is where you're looking. That's within the candle range. 35.5 underneath the candle.
I typically do a tight stop if I'm doing like a partial.
Yeah.
So I don't mind having a super tight stop on a partial, like a 9 EMA or even a 20, and say if it starts to show intraday weakness because I've made so much money, I'll pull part off. Yeah, and then let the other one ride. That's kind of how
I kind of feel like locking in some and just loose stop, let the rest ride, catch the momentum, ride the wave till the beach.
That's where my decision making will have to happen over the next 2 hours, Tyler. And I don't think we're going to get to 14%, but I get.
You gotta believe, Tim. You gotta believe,
Tim. They do price things in like for 5 years in 5 minutes.
That's right. We're pricing in the next 5 years. We need to get it done by.
Got to get it done now.
Yes.
Yeah. And Majid, actually, could you take a look at INMD2? Yeah, maybe one more here, Majid. I'm happy to do that. I'm having some fun here today. Nice little breakout consolidation time.
That's pretty. Yeah, I've traded this one before. I traded it on the last breakout. Actually, it's
got a clean setup,
and it runs when it wants to. It's a momentum stock. It runs when it wants to run. That's pretty. Not gonna lie, good pick.
Yeah, this to me is one of those aggressive triggers right above 48.40, stop loss right underneath the breakout channel, and you ride it to $50. That's what it feels like to me.
Well, and it's making it easy. It's telling you where to buy it. Like it's
literally that's where I got it. The 48.40 is literally right there.
Yeah. That's pretty.
I love it when entry points are clean. It does.
Oh, clean entry points are the best.
Easier. Matt, final thoughts, my friend.
Great show. Really enjoyed it. Had a lot of thoughts yesterday on the coaches show. So if you're a pro member of Tackle Trading, guys, and you have not had a chance to check out the unveiling of the Tackle 25, please do. We'll get that recording up today. And then outside of that, if you want to learn how to do covered calls, take advantage of the Tackle 25. We have it on discount. The Tackle 25 covered call system we have on discount right now over there at Tackle Trading on our annual sale. So take advantage of that.
Yeah, a couple days more on that sale, guys. If you're looking for a community, annual pros on sale, 23% off. You can find it in the store tab. We've got 4 systems on sale, 50% off, including, like Matt talked about, the Tackle 25. Pretty simple offer.
Yeah. Real quick, Ty, breakdown, last stock, AMKR, breakout. Are you too late? That's my question. It's for Jeremy. Jeremy's halftime crew.
I go halfsies. This is a scale in for me. I'm not too late on a partial position. Would I go full position? I'm me personally, no, but I would be okay with half position here.
Half position on the breakout.
Yeah, like think of it this way.
Can you quickly explain? I know what you mean by half position versus full position, but can you quickly explain to the team what you mean by that?
Yeah. So you have a decision when you're a trader to either say, if I don't have the ideal entry, and the ideal setup, I'm not going to trade at all, right? Or you can say, well, it's still close, and so I'm willing to trade, but I'm going to risk less money. I'm going to take less risk to acknowledge that this was not the ideal entry. I should have bought this at 16 or 15.75. It's 30 cents higher than the ideal entry point. And so I'll still trade it, but I'm not going to make as big of a bet as I would have if I had the perfect entry. So in my head, the way that I rationalize still taking a trade, but acknowledging that technically I was a little bit late, I'll just do a smaller bet. So if instead of doing 100 shares, I'll do 50 shares or whatever's the equivalent of maybe half of the normal risk I would take. Then I feel like I'm setting myself up where if it works, at least I participated, right? But if it doesn't, instead of me looking back and saying, yeah, I chased it, I could say, well, I acknowledge that and I lost less money. So I just think psychologically doing half size in a situation where I'm a little bit late sets up a good potential win.
And that makes sense. And Jeremy, how do you balance entry when the long term is breaking out too?
Yeah.
When you're analyzing that as a short-term swing trade, that's what we're going to look at it as. You may be looking at it as a position trade. You may be looking at it as an investment. You may be looking at it in a variety of different ways. But from a swing trade, I absolutely agree with Tyler's assessment. If you're looking at that with a multiple time frame perspective and you're looking at it as a position trade, you're not too late 30 cents in.
I would agree with that
which
too.
means you can go full position.
Yep.
So if you're looking at it from a swing trade, I do agree with Tyler on the half position. If you're looking at it from a position trade, then you got multiple time frame analysis on your side, and you're looking at it a little bit longer term than Tyler was, which means full position is appropriate.
Mm-hmm. Give me a max available 25-year monthly candlestick chart for 30 seconds on this, because I think I know what Jeremy's looking at. It's one of those tech bubble stocks that burst in 2000, and now we're finally pushing some levels. So I think your insight on that, Matt, is really good. It depends on what your time frame is, what you're actually planning on and building it from a trade perspective.
Yeah, and I don't know I don't know enough about the company to have a
I don't have a strong opinion.
If I believe in the position side. Jeremy knows more about the company than I do. I'm just saying from a technical perspective, that's how it typically is approached.
Yeah, love it. All right, guys, that is our show here for a Wednesday, 1/6/2021. We'll be back tomorrow with same show, same time, same station. We do this every time the markets are live, 12:30 p.m. Eastern. But before then, tonight, Tyler will be on Trade Masters with Coach Mark. We've also got Tackle 25 mastermind groups for those of you who are in that system as a part of it. We're going to be doing that at 8:30 p.m. Eastern Standard Time. And like Coach Matt just talked about, if you're a pro member, make sure you catch the recording of last night's coaches show. It's a great way to spend your afternoon. I thought it was a fantastic webinar. Definitely worth your time to go back and do that. That is on the website right now. You can go find that just on the front page of Tackle Trading and go back and review that recording. Guys, we're out for today. Have a wonderful day.